And in January, China experienced the sharpest decline in consumer prices in over 14 years, posing a significant hurdle for policymakers seeking to stimulate economic growth. Economists cautioned that deflationary forces may persist throughout the first half of 2024, citing ongoing weak sentiment in the nation. Patrick Falk of DD India brings further insights in this pivotal issue.
Well, official data showed consumer prices in China fell by 0.8% in January from a year earlier, following a 0.3% drop the month before. It was the third straight quarterly decline for the world's second biggest economy, its longest deflationary streak since the Asian financial crisis in the late 1990s. And it was led lower by a drop in food prices, pork prices in particular being the most consumed meat in China. There was also a big drop in the cost of buying a car as price wars broke out between automakers like BYD and Tesla. Now, cheaper prices might look good to consumers at first, but it doesn't necessarily mean that people are going to start spending again. In fact, it might make people hold off buying even longer as they wait for prices to drop even further, depressing economic activity even further. It also raises real interest rates, making it costlier for businesses to service their debt and harder for them to invest. It may also make people default on their loans, undermining confidence in banks. Now, China has struggled to regain economic momentum on the back of COVID-19, as many other major economies around the world has managed to do so. And that's mainly because of its deepening property crisis and local government debt risk. Policymakers have been cutting interest rates in an attempt to spur growth, but so far that hasn't worked. The government is expected to boost fiscal stimulus this year, but plans won't be revealed until it releases its national budget sometime in March. But Beijing does have limited options because of its slumping housing market, meaning a building boom likely won't deliver any results as it has done in the past.